Hey guys, in today's video, what we will be discussing here is something a little bit different on the channel. We'll be talking a little bit about politics, but with the intent of how to position your income portfolio with your CoveredCall ETFs in case a conflict between China and Taiwan and the US breaks out. So we'll be looking at one fund in particular that I think that I've had an eye on for a while, that may potentially act as a counter when potentially the rest of the market would take a dump. So we'll go through some news and then we'll look at that fund. We'll go through, of course, the fund manager website, and then we'll also compare it with info that I've constructed inside of the CoveredCall ETF ALLSTAR tracker. So let's get into this. All these links will be in the description below, and obviously the tracker will be in there in the pinned comments and the description below. So what is the big news? Just breaking as of making this video, is that there was an election held in Taiwan. There was one party that was, I guess, slightly more friendly to China, and the other party, which has been the ruling party for 8 years, they had an election. The party that was, I guess, less friendly to China, they won, which is, I guess, the first time in Taiwan history that a party that has ruled for 8 years, so they'll basically get a third term. So it's never happened before. The president's vice president won. So what does this mean? China's obviously had, they've been labeled as interfering in the election. As far as this article is concerned, basically it's just talking about, for now, it's going to be a stalemate. Maybe they project power just to demonstrate that they're not necessarily liking that decision. So yeah, it was the DPP that won. So going forward, what does this really mean for China and Taiwan in 2024 post this Taiwanese election? For now, basically the article is saying not much is probably going to happen. If the other party had been elected, there were maybe some ideas that perhaps the other party would have let China maybe have access to some of the sophisticated semiconductors and sell maybe more to them instead of the US. And that really is kind of the connectivity, the tissue that kind of binds what this potential impending conflict is all about. It's about semiconductors, right? The US military is a very sophisticated military, and Taiwan sells their semiconductors to the US. Not just to the US military, but these sophisticated semiconductors can be found in Apple products, Nvidia products. So if that is disrupted, that supply chain changes in any way, that can fundamentally, no doubt, impact not just the US, of course, the sector that drives US and growth, which is technology. I believe it's something like 90% of all the world's sophisticated semiconductors comes out of Taiwan, maybe another 6 out of South Korea. So very Asia dependent. I think it's in Texas, they're building some super factory for semiconductors, and there was maybe I think it was the CHIPS Act that passed last year in the US. And basically it's to build up an in-house industry within the US of semiconductors. They realize, where Taiwan is located is not great for any future conflict if the US has to get involved with it. So, okay, so we talked about that, give you a brief history, semiconductors and all the rest of it. So what is the fund, CoveredCall ETF fund, that could potentially act as sort of a ballast in the midst of a potential conflict, a run-up to a conflict, mid-conflict, and post-conflict? What could be that fund? So it's a fund I've had an eye on for a while. I believe it is BASE, Evolve Global Materials and Mining Enhanced Yield. This is a one-of-a-kind ETF. This is the only fund that invests just very specifically in the mining industry, or you could call it the basic materials sector. So let's go through this fund, and I'll kind of just explain. Actually, you know what? I'll do that first. Why would I think that a commodities ETF, especially a CoveredCall ETF, would do actually fairly well if China were to attack Taiwan. Well, we just got to think about what is upstream of semiconductors. Semiconductors just don't pop out of the ground now, do they? Right? We need the rare earth minerals to actually build these semiconductors. And where does that start? That starts with mining. So let's go through a little bit. The portfolio writes 33%, or it writes CoveredCalls on 33% of the portfolio. So that's important to know. So basically you get, essentially 66% of just participation, growth, natural growth, no matter what happens in the market. We have a current yield of 9.28%. AUM, just a hair under 70 million. Again, when we go into the tracker, we're going to compare yield, we'll compare AUM, and just see what the difference is between when I extracted that information in the tracker versus what we're seeing today or at least when this was updated as of January 12th. It's index based. The index that it follows is actually called, I believe it's called base. I think if you hit in the details here, it'll say that it's pegged right to the base index, which is mine. Anyway, 20 holdings here. Let's see, it's NAV slightly below market price. I actually got this question recently, the difference between NAV and market price. With CoveredCall ETFs, the NAV and the market price are always usually fairly close. I believe it's closed-end funds and split share funds that usually there's like a wider gap. So there's potential for what we call premium or discounts, and you'll see that on those fund manager websites. Let's go over to the overview here. Inception date was in June 11th of 2019. Here, management fee, 60 basis points, which is pretty well in line with plenty of CoveredCall ETFs, so nothing out of the norm there. If we look at its performance over, I gotta say, performance over time since 2020, it certainly performed well during after the bottom was hit in March of 2020. Maybe for another year, kind of traded. If you probably traded sideways a little bit. 2022 hit, and it's kind of been trading sideways ever since then. Let's look at the makeup of the portfolio. So sector allocation, we can see basic materials here. Geographical makeup, most of it are US listed companies, but of course you got others from Luxembourg, Britain, Brazil, Australia, South Korea, and South Africa. I think one of the last ones we'll look at here is performance and we'll also look at this in the tracker as well. Over the past month, 3 months, 6 months. What's actually more interesting, I think, is the individual calendar years that this has performed. Done admirably in 2019, 2020. No doubt it did well there. We can see in 2022 when the rest of the market, let's just call it the S&P 500, in a bear market in 2022, down, I think it was just a hair under 20%. And it just went to show that in a year like 2022, which was a fairly commodities-driven year coming out of the pandemic, that this rebounded, that this acted as just far and above what other indexes were producing. So, in my opinion, did well in 2022, considering the rest of the market did not so great. And then in 2023, again, looks like did well here. Now that we've kind of looked through sort of the basic information of base, let's actually jump into the tracker. For those who don't know, I created I call the CoveredCall ETF ALLSTAR tracker. Currently working on February's update. I just finished loading up all of the .U, .B funds. So these are the unhedged versions of some of these funds, and also the US dollar version of some of these funds. And I'm also going to be putting in a couple other tabs down here for distribution history and a bunch of other good stuff. So if this, as we go through it, if this is something you are interested in, I'll have a link in the description and in the comments to join. It's $9. It's $9 US. It's again. Which works out to about $13 Canadian. And once you join, then you'll have access to the tracker here. It's a Google Sheet. Every month I update it, and again, fairly new, launched at the beginning of January. And to me, this is my go-to tool for CoveredCall ETFs. So let's go through it. So what I'm looking at is what you would look at, which is a view-only version of the Google Sheet. So we got to click on number 2 on the vertical column, go up to Data, create a new filter view, and that will give us the ability to filter. So let's go over to ticker symbol over here. We're going to clear everything. We'll put in base, click on that, hit OK, and now we can go through basically all of the info and we'll compare it. So first and foremost, yield. That's what we care about as income investors. What is the yield looking like? Well, as of when I extracted this information on December 29th, the yield, the forward yield, which I got a little explanation up here as to what that is. Forward yield, current distribution, times 12 months, since there are 12 distributions, it's a monthly distribution, divided by the share price, which at the time got us to 8.78%. So as of that date, we can see that yield has actually jumped up about 50 basis points in that period of time, very short period of time to January 12th. Base has, I believe, gone down, I think, to start the year, maybe about 6%. Let's kind of look at historical performance here. This is just price performance. So you know how on the fund manager website, we were a little bit confused by, was it total return? Was it price return? In this tracker, I'm giving you specific, there is no questions. If you see PP, that means price performance only. So 1 week at the time of December 29th was negative 0.37%. And we can see that year to date, well, in 2023, it was about 7%. And then over the course of 3 years, price performance 5.97%. But compare it to the price performance plus the dividend, the total return over that period of time was 30.63%. Just going to show that once we include the dividend and we reinvest it, the compounding action is pretty incredible. So let's keep moving along. We'll skip over payout and payout dates, management fees. So as it was shown on the fund manager website, we got 60 basis points. So another measure of fees that you're paying is the MER, the management expense ratio, which is total fee, so management fees and your trading costs. If there's leverage, it would be that too. So you'd see that in MER. Portfolio coverage, 33%, simply just meaning, again, cover call writing on 33% of the portfolio, where the other 66 and a bit percent just get to participate in whatever the underlying assets do. Moneyness, out of the money. Again, this is another measure of how aggressive the cover call writing is. So simply being out of the money, not as aggressive as, say, something like at the money or in the money. Again, another important metric is AUM, assets under management. At the time that the info was extracted, AUM was sitting at about 75 million, whereas right now it's just, again, it's 69.5 million. So AUM taking a little bit of a dump as well. Dividend streak, it has paid out for 55 straight months. That's what this means. Again, a little tab in the corner that can tell you number of months the ETF has been paying out a distribution without a cut. So it's either maintained the same dividend or it's actually grown it over time. And then we have the very first month that the distribution paid out, August of 2019. That first distribution was about 10 cents. And then we look at December's distribution and January's distribution. I wanted to do month over month just to capture any month over month distribution changes. So that's what these two columns are for here. This captures month over month change that you'll see in every single tracker. And then this captures the difference between the first distribution paid and the most current distribution payout. So month over month, nothing changed, but get a load of this. Since 2019 to date, the distribution has increased 100%. That's incredible. That's amazing for a covered call ETF fund. It's not something I expect. Any kind of distribution increases or price performance increases, to me, I see that as a bonus. A lot of these funds, in the way I look at them, are kind of just status quo. If they could just sort of maintain what they're already doing and I reinvest and essentially I'm controlling the way it's compounding, again, more in my control, and everything else that comes after that is a surprise. So this would have done basically, on average 20% a year distribution growth, which again, just phenomenal without a cut. I believe it hasn't cut 55 straight months of payouts. So for as income investors, especially info like this is something we care about a lot. And of course, if you're looking at the tracker, you're going to be able to see that with all the funds that you're interested in. Now that we've looked through that, there was one chart I wanted to show you guys that also kind of spurred the motivation of this video. Okay, so right now we're looking at best time to invest when industry isn't. New economy versus the old economy. This was taken off of X. I believe it was Bar Charts was the account that posted this. So it just shows, right? Like when people are buying tech or when tech is really high, what should you be buying? And currently tech is just, again, extreme exuberance doesn't mean it's not going to stop. It very well can mean it'll keep going and growing and growing. I think tech is going to be a fundamental industry going forward. I plan for it to be one of my most significant sector covered call ETFs that I'm going to position in my TFSA going forward. I actually, within the last couple of months, I upped it from 10% to 15% because I do feel like any kind of growth is going to be driven by the tech sector. But that also doesn't mean that we should ignore things like the old economy. So things like buying commodities. And I know an inflation report just came out, which in the US it ticked up from 3.2 to 3.4%, which means if that's the case, if inflation is going to continue to be sticky, commodities most likely probably benefit from that. So even if you don't even care about Taiwan and China, that's never going to happen. Inflation could be another way of playing base. Anyways, everybody, hopefully you like this video. Learned something new, of course, about geopolitics and, again, more access to the tracker here. If you like what you saw, as always, do the cliche thing and hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.